Guys, we are doing a directional bias update. It's 24th of June 2025, and I'm going to be going through the euro dollar, the Aussie dollar, and the USCAD today, just showing you our current directional bias. Okay. So we're here on the euro dollar 3-day chart. So if you're familiar with method trading, you know that we do our directional bias on the 3-day chart. We're clearly in an uptrend. We've got a long bias here. We've been, so our high and our low, kind of zoom out, kind of historically, we've got our last high up here, start of 2021, and then 2021 we had this really long trade down to end of 2022, kind of a 2-year trend. And we look like we're reversing that now. So our high up there and our last low down here, we took out really historical levels which go all the way back to here, 2002. And it looks like we want now, our bias is to reverse this, and we'll be trading long until we get, you know, confirmation of a significant retrace in the opposite direction. So if we take our fib, go back it over the top to the bottom, you'll see that we've been stuck under the 61.8 fib range, and we've been ranging, and that's been since 2023 all the way to start of this year. So it's a good 2 years that we've been, or 1.5 years that we've been ranging here. In end of 24, we took up these lows, so we started an expansion all the way down to almost taking out and invalidating this level here. We pull that across, but we didn't get a confirmation below that, and we actually got confirmation of going long there. So we've been long since January 25 on this level, which means we wanted to take out the top level here, which we did. We had expansion to the downside, expansion to the top side, and we're getting confirmation of this breakout. So we've been continuing to trade longs. We did trade a couple of shorts in here, which didn't work out. But then once the confirmation came through, we've been long. So at the moment, because this is quite a significant range that we're actually, now that we've broken out of this range, this internal range that's been forming for a couple of years, we're kind of back to looking at the liquidity on this range. And because it's quite large, it can be handy to drop down to the 1 week. Okay. So we had, let's back it on here. We had this liquidity here, which was taken out. Okay. And now the next liquidity is up here. Also tapped into, taken out, which resulted in a slight pullback. And on the daily, we've just had confirmation on a bullish candle, which is why you can see this uptrend again. So we're currently in a long trade, and our next target is this liquidity up here. We are looking to ultimately hit these highs here, but we're not expecting this to happen in one go. It looks like it, you know, we keep kind of retracing a little bit back to grab some more liquidity. So once we hit here, we'll take profits, and we'll get re-entries once we get confirmation of new long trades. We might get a retrace all the way back down to, if we go back to our 3-day, might get a retrace once we hit these levels up here, might get a retrace back to these 3-day levels here, which will probably also coincide with a bounce or a retest of the 61.8, and then we might head back up. We could see this as an interim level, creating a new range, and we could, see pullbacks all the way down to taking out some of these levels here. But we don't trade that far in advance. We're really going to trade to here and then see what it does at the liquidity there. So for now, if we go down to the 1-day, which we have, where we place our entry events, you'll see we're getting this quite a good bounce here of the 20 MA. So we'll, we're in a trade at the moment. We'll see how that plays out. If that trade fails, we may be heading back down to these levels here to trade longer. But I don't think so, because we've already crossed the 200 MA and had a nice bounce off it. So I think price wants to keep creeping higher. We'll wait for invalidation of our current long entries. Okay, so that's the euro. Let's head to the, what have we got next? The Aussie dollar. Okay, so on the 3-day Aussie dollar, we had the high up here from Jan 2023, the low here, October 2022, and we've been range bound since then between these two levels. You can see we were kind of trapped inside this interim highs quite a while, 23, 24. Grabbed some liquidity above there, but headed back down, and we traded the longs from this level here, and we had a few nice trades in this space here, but ultimately price wanted to come down and take out this level down here. Okay, so that's from March 2020, the COVID drop. Now that we've tapped this level and we've taken out some last liquidity levels here, we are looking bullish again. We're actually trading this bullish, but we're getting a lot of resistance here at the 3-day 200 MA, which also coincides with the 61.8 fib from this last most recent high to this most recent low. So this is a new low, so we do expect this high to be taken out. If this is the internal range, we've expanded to the downside, so now we want expansion to the upside. But we'll look more or less this level. Obviously, we first need to get past this 200 MA. On the 1-day, it's been pretty nasty. So this is where we took a few long entries, but ultimately also taken out of a couple here. So since this dropped to the downside and grabbing liquidity down here, which was great, it raced pretty quickly back up, and then has been doing this horrible crabbing pattern across the 1-day 200 MA. So it has crossed the 1-day 200 MA, the 20s crossed the 200, great, tick, tick, tick. We're at the 61.8 fib. It's pulled back, and now we're getting this nice candle testing the 200 MA. It's also wicked down and taken out all of this liquidity it's been setting up through this crabbing pattern. Obviously, when we had a couple of trades in here that didn't work out, and once we get this crabbing pattern, so it's often kind of informed by a lot of internal entries, which we call inside entries, and we ignore them because we're actually kind of forming a bit of a flag. We just don't want to trade these. We want to wait for this pattern to kind of have an eruption. So that's literally this candle taking it all out. And now I will wait for a confirmation. So we need a daily candle to break the last daily's high. So we need another green dot candle here before I'll get back into longs. But so far it's looking really nice. Bullish bias, but we're sitting on, well, we're not sitting on the sidelines. We just don't have an entry yet. So we're waiting for this to just form and finish what it's doing. But, you know, this price action has been pretty nasty, and we like, once we identify that it's crabbing across the MAs, it normally does this on the 200 MA, so on the daily or on the 3-day. So if you start seeing this kind of quite tight ranging, and you'll know it's happening because you'll have 2 or 3 trades that just get stopped out. Its price isn't really taking off like we'd expect. So, you know, on those you want to start just sitting out and wait for it to resolve, because they're just grabbing liquidity. You know, if you were trying to trade this, it's set up since April, okay, till now, June, April to June. If you're trading this in the daily on a low time frame, you were, you know, there are some nice trades in here if you were trading the ranges. But if you're expecting a breakout, or you're trading the breakouts, you're getting a little bit annihilated here. So for me, it's price action. We want to sit out, but it really depends on how you want to trade it. If you can identify this formation happening on a really low time frame, you get some really nice trades back and forth. Okay, it's not how I trade, but okay. So bullish bias on the Australian dollar. Let's go back to the USCAD. Okay, so 3-day. On the 3-day, we're bearish. We've just tapped these highs back in January. We've been bearish since January. It's actually forming a bit of a triple top if you go back to some really old 2016. Therefore, over time, can we expect these lows to be retested? I think it's going to take a bit of time. But again, you know, highs to lows. Here we traded this March to May, about a year and a bit. But identifying our levels on the 3-day, we've just tapped into this level here, this last push up, where we had, you know, this really, let me just highlight this one. This was on the 3-day. This was the last, before we broke this intermediate range, which is a break of structure. It came, the whole move came from this liquidity zone here. So that was our first target. We had the correct price action from here. Our buys remained short. We were just looking for new entries up there. And we had a really nice liquidity flush trade right up here in May. And then we've been trading down to the next level. As you can see, we're getting a slight retrace, but we're looking for this to just continue short now. I think the price action will be very much continue in this kind of a fashion down to there. And if we go further, it will, you know, we might get a bit of a retrace here and then same price action down. So we don't want to just sit forever in shorts. We want to take profit, because when it retraces, if this is invalidated and we could go long, we don't want to have missed out on these trades. So it's important to identify interim levels as well. Why is my, let's go back here. Also, if we whack our fib on the extreme high to low, okay, our next target, so when we've got some short entries here, I'm just waiting for confirmation to enter them. Our next target will be this zone, which coincides with the 61.8. But also, let's just look at why this is the zone, because if we look at our break of structure, so when we were retracing back up here, we've got this initial kind of range. Okay, it's a trending upwards range. It was just slowly, grabbing liquidity, making a slightly higher high, grabbing liquidity, and then we had a breakout here of the we whack this one with a 61. Okay, so the breakout up to the 61, take that off, which was really a break of this structure. And the structure, so it's not a straight line, but the structure broke here. And the price action that formed that was this last push down, which we call the manipulation candle, this red dot, and therefore our next, this is the zone that formed this breakout. And then from there, all the liquidity has run from the zone, kind of keep pushing it up until we got this breakout. Okay, so that's kind of how you look at which levels, because this can get a little bit messy when price ranges like this. But you want to kind of like cut through the noise and look at where's the actual move that caused the breakout, because those are the moves that where the liquidity zones are. Okay, so our next, we kind of just accept that that's our zone. We're happy with it. We also are expecting, again, we had the break to the upside. There's, once this liquidity forms, it's been grabbing liquidity here, but it also creates liquidity below that. So we often like to put the zone like that, like where's the actual liquidity left here? And then if we reapply our ultimate fib, it's aligning quite nicely. You obviously want to be conservative as you head into, breaking, especially this level here. We're expecting this level to be broken, but this level here, they could be tricky and have a bit of a retrace as they grab the liquidity coming through here. So you want to start really, as you get really close to your targets, trailing them quite tightly so that you just hang on to that profit. But until then, we don't want to be trailing anything. So that's kind of our intermediate bias here is shorts. Our long term also is shorts, but obviously all the way down to here. But we want to first see the price action at the 61.8 level. There could be quite a significant pullback, as you saw here when we hit the 61 up here on this previous retrace. We had all of this kind of price action before we got to the final. So could we see again long-term range before we head down to here? So you want to see this, you want to see price action break this level, confirm below it, and then we'll be back into shorts. But we could be ranging after this. That's a way longer outlook. For now, we're short, and this is our target, and we'll be taking on short entries on the 1 day and below. So yeah, I hope you enjoyed this. I'll be doing another update on significant charts next week on our bias outlook. These bias should really hold until they're invalidated. So I'll probably do another update on these pairs in a couple of weeks, 2 or 3 weeks. Or if anything changes, I'll obviously update this. But for now, we can stick to our biases as I've explained. Okay, thanks. Hope you enjoyed it, and good luck trading.